Palantir Technologies just delivered its strongest quarter ever, and Wall Street is watching closely. PLTR stock surged about 4% during Monday's session and then popped another 4% in after-hours trading, pushing toward $160 to $161, following a blockbuster Q2 earnings beat on August 4th. Let's break down what happened, why the market reacted so positively, and where things stand from here, in a tone that's bullish, but grounded in the hard facts. Palantir reported record Q2 revenue of over $1.0 billion, an impressive 48% year-over-year increase, well above the $939 million consensus estimate. U.S. government revenue climbed 53% to approximately $426 million, while U.S. commercial grew nearly 93% to $306 million, reflecting explosive AI adoption across sectors. Adjusted earnings came in at around 16 cents per share, topping expectations of 14 cents. Net income soared 144% to $327 million, with GAAP operating income reaching $269 million or a 27% operating margin, and over 50% of revenue was converted to free cash flow. Management followed with guidance upgrades. For Q3 revenue, they now expect between $1.083 and $1.09 billion, and full-year 2025 revenue guidance was raised to between $4.14 and $4.15 billion, up from prior projections of $3.89 to $3.90 billion. That's an approximate 6% increase in annual guidance. Analyst expectations of revenue growth near 39% were exceeded, pushing expectations higher for what 2026 could look like. The stock responded accordingly. PLTR rose 4% in regular hours, hitting new highs, then extended gains with another 4% in evening trading as investors re-evaluated the bull case. The numbers were not just good, they reset expectations. This was the first time Palantir breached $1 billion in quarterly revenue, confirming its transition from growth stage to a more mature enterprise with scale and profitability metrics typically reserved for established companies. Operating income, free cash flow conversion, and GAAP profitability underscore that this is not just hype, this is real performance. The commercial segment is now clearly contributing meaningful growth. U.S. commercial revenue nearly doubled, up 93% year-over-year, indicating that Palantir's artificial intelligence platform, AIP, boot camps, and enterprise sales strategies are gaining momentum across industries outside of government. There was also transparency around government contract scaling. Palantir's deal pipeline includes a potential $10 billion enterprise agreement with the U.S. Army, consolidating up to 75 separate contracts. That provides both revenue visibility and scale potential in coming years. Management emphasized sustained AI demand. CEO Alex Karp described the quarter as phenomenal, and CTO Shyam Sankar pointed to broader enterprise demand driven by a convergence of large language models, faster chips, data infrastructure, and Palantir's integrated stack. Despite this strong performance, many analysts remain cautiously neutral on the stock. The average price target remains around $107, about 30% below PLTR's post-market price, and only 2 out of 12 analysts rated a buy, the rest a hold or underperform. Goldman Sachs, UBS, and Citi continue to flag high valuation as a key risk, even while acknowledging solid fundamental execution. Wedbush, one of the more optimistic firms, raised its target to $160, citing Palantir's accelerating U.S. commercial momentum. That tension, between strong execution and conservative target setting, creates opportunity for those willing to lean into upside but still understand the risk. For years, PLTR has been viewed either as a speculative AI play or a defense contractor. This quarter confirms it's both. AI adoption across enterprise and government is real, and rapid. Now with revenue scaling past $1 billion per quarter, Palantir is evolving from a narrative stock into a revenue engine grounded in consumer value, operational efficiency, and national security infrastructure. The biggest caution today is valuation. PLTR trades at EV-to-sales multiples of around 100 times based on 2025 revenue forecasts and forward price-to-earnings ratios in the 200 to 300 times range. That is extremely rich, even for high-growth software companies. At these prices, investors are banking on consistent execution and acceleration, quarter after quarter. While U.S. commercial and government revenue is booming, international commercial sales actually declined in the quarter, even though international government sales rose 37%. That imbalance limits Palantir's runway unless it can gain traction overseas. Palantir has also experienced post-earnings volatility, even after beating on metrics. Historically, out of 19 quarters since going public, The stock has moved an average of plus or minus 16% the day after earnings, with negative reactions in about 9 of those cases, often driven by tone, guidance, or sentiment rather than the numbers themselves. While today's rally is grounded in performance, the story remains fragile if momentum shifts or forward commentary sets a cautious tone. As PLTR heads into the second half of the year, here are the key themes I'll be tracking. First, commercial bookings cadence. Are AIP bootcamp conversions accelerating? Are enterprises rolling out long-term contracts? Second, guidance language. Did open-ended commentary hint at deceleration or confidence for 2026? Tone matters. Third, international traction. Can Palantir reverse the year-over-year decline in non-US commercial revenue? Fourth, Army contract rollout. Is there any specific milestone or timeline mentioned for the $10 billion enterprise deal? Fifth, margin expansion and cash flow strength. Continued improvement in free cash flow as a percentage of revenue will be key to supporting valuation. In summary, Palantir crushed expectations on Q2 revenue, profitability, and full-year guidance. The stock surged accordingly, about 8% in a few hours. But this isn't just another earnings beat, it's confirmation that Palantir is delivering scale with profit, commercial traction, and expanding runway. I remain cautiously optimistic. I've held PLTR for years, seen it surge dozens of times, and also crash sharply. But this fundamentals-backed momentum gives me more conviction than ever. This isn't hype, it's execution. That said, I'm also mindful that the stock is priced for perfection. Any hint of softness, whether in guidance, tone, or growth, could trigger a meaningful pullback to key levels like $125, which acted as support historically. If you're a long-term holder or considering adding shares, this quarter confirms the bull case and reinforces the downside risk management strategy. Keep research close, know your risk tolerance, and don't chase on emotion. There's also an interesting dynamic at play with institutional versus retail investor sentiment. Retail investors remain highly enthusiastic about Palantir, as seen in the surge in social media engagement and increased trading volume in retail platforms. But institutional firms, while clearly impressed with results, continue to urge caution on valuation. This divide creates a potential for volatility but also a floor of support, particularly if large funds eventually feel compelled to increase positions to avoid missing out on sustained outperformance. Palantir's AI capabilities also continue to evolve. The partnership with Elon Musk's xAI has brought new integration opportunities with Grok, and the bootcamp model is becoming a blueprint for enterprise AI onboarding across sectors. These programs aren't theoretical, they're being executed, refined, and scaled. In addition to the Navy's Warp Speed for Warships project, which modernizes military ship production using Palantir's data platforms, there's growing interest in using Foundry and Apollo across energy, logistics, and public health infrastructure. These aren't small markets. If AIP proves to be sticky, scalable, and mission-critical, Palantir may begin to trade more like a platform company and less like a services vendor, potentially justifying premium multiples. But as we've discussed, premium multiples come with high expectations. Investors will want to see not just growth, but consistent reinvestment efficiency. That means no margin compression, no guidance resets, and ideally, strong conversion of bookings into long-term revenue. There's also growing speculation that Palantir could be included in the S&P 500. It's already in the Russell 1000 and other institutional indexes, but if its profitability streak continues and float metrics align, S&P 500 inclusion could bring an entirely new level of institutional demand. For now, Monday's trade action tells a clear story. The market believes Palantir is on the right path, and it's rewarding strong execution with higher prices. But no move is linear, and we should expect pullbacks along the way. Even the best companies experience volatility, especially when the market gets crowded and short-term expectations outpace long-term fundamentals. But this earnings report? This was about as clean as it gets. It wasn't just a beat. It was a statement. A statement that Palantir isn't just riding the AI wave, it's building it. Thank you for tuning in. If you found this breakdown helpful, please give it a like, subscribe for more updates, and drop a comment below. Are you holding PLTR long-term? Taking profits? Waiting for a dip? I'd love to hear what you're thinking. Until next time, stay informed, stay disciplined, and keep your eyes on the long game.